This is American Express. Here are your price targets for Monday. We ended the week at $201.43, up a whopping 7%. Congratulations if you made some money off of this stock. Now, the 52-week low is $140.91. The 52-week high, $204.77, which we hit on Friday. This is where we ended at VWAP. To the north side from where we are takes us to 2 standard deviations, and that is roughly 207. Above that, at 3 standard deviations and another potential take profit area and resistance, 210.79. And at 4 standard deviations, which I do not think will hit there in one day on Monday, which would be 214.52. Now to the south side, back at the middle of the trend, takes us to roughly 199.58. Below that, at -2 standard deviations, a gap develops to the south side, 192.32. It closes out at -3 standard deviations, roughly 188.27. This is also support and a potential buy-in area, and another level of support and potential buy-in area, 184.55. The RSI is turning down. This is what we look like on the daily time frame. Move this out of the way so you can see better. We are at 3 standard deviations or close enough and at resistance, and we are overextended on the RSI. I will anticipate us to possibly go up a little more, curve over, and go right back down eventually. So this is a take profit area, another take profit area. I don't know if we could get up that high without correcting first and then another leg up. But do not expect this thing to continue to run without pausing. And the 1-year price target is now 240. So we've hit the 1-year price target already. So be aware of that. And when we go back and look left, note we made it to 3 standard deviations, and we're going to turn here shortly. And this is resistance, support, and you see the potential buy-in. Normally that area is the potential buy-in area, and we saw that happen, and then a bounce to the upside at support, a sell-off here at resistance, another level of resistance, a bounce at support. All day long, price tends to stay within -2 and 2 standard deviations. So you can turn off this and look back in time and history here. How many times have we made it past 2? Well, we made it here, and this little area, a nice little run. And then here, didn't quite touch down there before it started running up again. So pay attention to that. Do not expect price to go to 4 standard deviations without pausing first for a potential run up and then quickly a sell-off after that. The next one I want to go over very quickly is EBIX. I will show you this on the 5-minute time frame, which I like to work in and show you guys. Turn back on my 4 standard deviations, but again, do not expect it to hit there. And if it does, you better get out because it will crash on you for a potential leg up later. Possibly. Now, we ended the day at 242, up 8.5%. The 52-week low, 48 cents. The 52-week high, $32.87. This stock has tanked, and I've been tracking it for a long time and played it up in the 20s, okay? But it's crashed since then. I'll show you the 1-year price target. Oh, wait a minute. This one doesn't have it because it's just, they don't give it. And I can see why, but there's a potential for swing trades here, and that's why I do it. We ended the day at 242, and that is right here. I'm going to turn off VWAP, and that would be right here at roughly 224. But my chart is starting to get messy and ugly, so I'll remove that. Now, to the north side takes us to 4 standard deviations and resistance. We could pop up here on Monday and then fall back down, but that's at 250, which we hit right here on Friday, the high. And to the south side would take us back to reality at 2 standard deviations, 233, and back at the middle of the trend and support 217 at -2 standard deviations and another level of support, $2, 192 and 184. Looking left, this is resistance, and we fell down. Support and a bounce up to resistance, and then we fell back down, going sideways, and then busted through resistance. And then looking left, resistance, resistance, and a sell-off. Now, I bought in the last time on the 25th at $2.23. I actually just put an order in. I didn't even know I got it until Friday because I was not paying attention. But I thought, okay, it's time for me to get out because I got it close to support and then it went up and then fell down and then boom, look at this. It crashed on me, okay? I did not buy in. I wasn't paying attention. But fortunately, we went up, back down. The cycle repeats itself. And then on Friday, I put in a sell order, was not paying attention, and it triggered. It did go up to 4 standard deviations and then started to crack. But I got out. So on this buy-in, I bought in at 223 and got out and off the gravy train. Let me make sure I bought in at 223. Oh, 223, and then I sold out at 246. I specifically put in that amount because I didn't want to chance it and not get triggered because I did not want to keep this because I predict it's going to go down before it goes back up again. And I wanted to hit it at around the 10% range at 245. That would only give me 9.76. So I was living on the edge there and got out at $10.21. So I am done with this. I will no longer be a buyer, probably until we hit maybe along this line here because we're going south. The channel is south. And then for sure along this line, or that line. I will not anticipate it go to this level without being scooped up, but definitely I could see it going back to this level. So again, I'm not a buyer up here, only a buyer down here. I play pretty conservatively with this. And previously I bought in at 210 and sold out at roughly, what was it? Not roughly, at 265. Oh, right here. Let me make this bigger so I can see it. 265. And that was a return of 26.69. I've traded this multiple times. When the ticker symbol was EBIX, it changed over to the Q because it got delisted, something like that. But just Google the information. But this is risky, and that's why I'm not going to get back in until I get the price that I want down here. All right, that does it for me. Thank you so much for watching.